Kenny. The big question of the day, how big is it?
Whoa, we're
Bigger or smaller?
we're jumping straight into it, aren't we? I love it.
Get your mind out of the gutter, Kenny. You're a Christian. I'm a Christian. We don't think that way. Well, I guess we do, but if we were Catholic, we could do it and then repent on Sunday, but neither of us are Catholic. So,
Ouch.
honestly, so I'm under contract, Kenny, for the largest single family home that I've ever purchased, dollar wise, $3 million. And I think a lot of people are very scared about, not scared, but maybe apprehensive about what's coming down the pipeline. We're in an election year. You're the data king, and I'm going to put myself out of this discussion for a minute and just let you roll. Should people be looking for bigger properties, which is what everybody's been trying to do since COVID, right? Or are smaller properties performing better? What should they be looking at from a purchase standpoint moving forward?
Yes. So I believe that give my classic Kenny answer. It depends, right? Depends on your situation, depends on what you're looking to do. Look, I like to use the analogy of like, look, you can go to Walmart, you can go buy a tent for $100, you can throw it up in your backyard, and you can make $100 tent, make $1,000 a year. Okay. But it's a freaking tent, right? The ROI on that, insanely high. But you made $1,000. That's not worth your time. So there has to be a balance of like ROI in time. And I don't really think it's black and white of, oh, is it best to go smaller or better to go bigger? Because it really depends on what is it worth to you and what are your actual goals? What are you trying to achieve here? A lot of people, like I know Bill, you're a big proponent of this. And it's one thing that I tell people all the time, like quality before quantity, right? So do we want to have, if we're making $1,000 a year off these tents, do we want to have, 100 or 250 tents set up? No, we don't want to do that. That's insane. So, there's got to be a right balance in all things. And I think it really depends on a couple of aspects. Number one, the risk position of the individual, meaning like, if they're going to bank all their like savings and hard earnings and all their investment funds into one big property, I probably wouldn't say go buy one big property. I would say, you know what, probably start small.
And please don't ever do that regardless.
Right.
Don't push the chips all in, especially on property one.
But that's I hear that a lot because people think you're either all in on small or all in on big, and there's nothing in between. And people don't realize that scaling and growing is starting not necessarily small, but starting where you can start that's comfortable based on your risk tolerance and budget and preferences, all those great things and your goals, and then building upon it. But you have to remember, and I have this conversation with a lot of rookies or newbies, I should say, you have to remember the property you're about to buy, you probably won't own it in 5 years.
And you know what? I mean, that's the whole premise of my 550, 250 plan, right? You have to have the mind. I just filmed a podcast for one of my other SDR Unfiltered this morning, and it's about the mindset of trying to sell quickly as opposed to buy and hold, right? So I think one of the things that a lot of people don't talk about in our industry, Kenny, it's just been cash flow, cash on cash return, that type of stuff. But you look at the appreciation on $1 million property, if it does 5% appreciation, what's 5% of $1 million? Right? It's $50,000 a year. You're the data guy. I'm the college dropout. Come on, you got to be faster than that.
Let me use the college. I was using a calculator all the time.
So. Right. I didn't have time to open up my app and my phone and all that stuff.
Yeah.
So think about the appreciation, right? So, I mean, if you're buying $300,000 properties and you get 5%, you're doing, what is that? 10% is 30,000. So you're doing roughly, 22.5 or whatever it is, 25,000. You do $1 million property, you're doing 50,000 in appreciation at 5%. And it's something that I really didn't even start talking about that and teaching it until I, put the 550, 250 program out, because appreciation is a huge component along with debt pay down, right? So I just think that people need to understand we all start small. Kenny started small. I started small. Almost everybody did, unless you're independently wealthy. And even a guy that both of us know that is independently wealthy, he started small, right? In Alabama. Very few people go in and start large. Now, I've gotten into big properties, but I've leveled up. Just like what I'm doing right now. I'm buying a $3 million property, but I'm selling 2 properties. So I have over $1 million in cash to be able to, offset the debt leverage. But also, you mentioned this, my outcome, my plan is not to have 25 properties, as you're well aware of. So it's basically a 2 for 1. I'm eliminating 2. I'm eliminating the time on those 2, and I'm putting it all into 1. So I think what you said it very eloquently, and I think I'll just add on, you have to determine what your desired outcome is first to fit in that box. Now, with that being said, we've seen mastermind members, we've seen people that we both have coached, that we've talked with, we've consulted with. They are 10 properties in, and they're still doing 1 and 2 bedroom condos, right? And that's just not something that I want personally, but it doesn't make it wrong. And I think a lot of people look at the way that you and I invest, or any influencer invest, and they think that it has to be that way, and it doesn't, right? I mean, you need to do what's right for you, but I do think that time value approach is a very big deal that everybody should take a look at.
Absolutely.
Now, with all that being said, which is a better investment today? Is it a big property or is it a small property? And I get it depends. I think that's market by market. So I'm just going to put you, I want one word answers, and I'm going to put you on the fucking hot seat, okay?
Okay.
Gulf Coast, big or small?
Big.
Smokies,
Definitely big.
St. Louis,
Small.
okay?
Cities are small. Cities.
Orlando.
Pass.
Don't invest there, right?
Don't even invest
The
there.
Logan X on Orlando or what?
I would say it's not going to be extremes. I would say a 1 bedroom or a 15 bedroom.
So do you remember the opportunity that we had, a year and a half ago down there with the 4 15s? I just had something very similar pop up with a new construction. Actually, it was from Avery, right? And, I can't wrap my head around even remotely wanting to invest in that market at all. I just see way too many better options elsewhere.
Well, it's just insane, the level of competition. So the when you're the build short terminal wealth group, you do the Heart Friday, or what do you call it? Favorite Friday?
Favorite Fridays.
So you gotta so everyone posts their links, and you gotta heart to Airbnb listings or VRBO listings. And when people do it, it amazes me. Some of the nicest properties people like the optimal listings, the pictures, the amenities, like the whole works. They're like the best of the best. They've obviously invested thousands and thousands of dollars in these properties, and they're really, really nice. And they're always in the most competitive markets, like always. It's like that's the standard. You have to do that, and it's amazing. Like some of these people, like I tell people, and hopefully this is okay. What do you know? But I'm like, hey, if you like my list, if you heart my listing, I'll heart yours back and even critique it. Why not? And so I do that, and people love it. But it's funny because some of these people actually reached out to me, and they're like, hey, I'm actually losing bookings. Like I'm not getting bookings. Like what can I do? And they have amazing properties. And I'm like, the way they look. And I'm like, look, it's not necessarily your listing, it's the market, it's where you're at and what you bought and all these other factors. And I'm like why? Like why even like go into that? Is kind of like this like feeling that I've had is why even compete at that level? I told someone the other day, I said, if you took your property, which is like perfect, and you dumped it into a market that's like, 50 miles from you, you would crush everybody there. Why aren't we thinking like that? Why aren't we talking like that?
Because people are followers. They follow the herd, right? It's just
that's true.
It's a human mentality. That's why everybody still flows into Orlando. They still flow into Destin and Miramar. They still flow into the Smokies. They're still going to Joshua Tree and Palm Springs because that's where everybody else is.
Well, there was somebody like posting in your group today, your Facebook group, Build Short Terminal Wealth, and they said, I'm a new investor and I'm looking for a realtor in Scottsdale or Gatlinburg. And I just want to go like, why? like,
Yeah,
like what? Why Scottsdale and then Gatlinburg? I understand like, oh, well, I live West Coast and I like this area. I've heard that before. Or, Southeast, and I really like that. Or I'm in Nashville or something like that. But like, it seems exactly.
go to Tucson, go to Taos, go to Heber City,
The
go
herd.
someplace else.
The herd, chasing the herd, chasing.
So really the answer, Kenny, is there is no answer of big or small. It's
there is no answer. I love it.
you need to underwrite the market. You need to do it by bedroom count, and you need to find the gaps. That's it's the one thing that is 100%, 150, 1,000% consistent with the way that Kenny and I invest is we're finding the markets and we're doing it by bedroom count. We're doing it by sub market, and then we're finding the gaps in that market, right? And there's a reason that Kenny's in Buffalo. There's a reason that Kenny's in Arizona. We won't talk about that one though. There's a reason that I have gone exactly what Kenny just said is why I have gone to Fort Morgan, Alabama versus Gulf Shores when I started, Gulf Shores and Fort Morgan versus Destin, Banner Elk, all that type of stuff. But people follow that herd, and that's where they're getting crushed. So I would tell you, if you're going to follow the herd and you're listening to this, go small because you'll lose less fucking money. I mean, it's just a reality. You'll lose less money doing it because if you follow the herd, you're going to lose money.
Do a
There
one
is
or two
no
bedroom,
question.
play it safe. You'll, I mean, probably worst case, break even. You know, a lot of them make a little bit of money, and a lot of them are proud. They're like, oh, I made, you know, I grossed $60,000. It's like, great. You probably cash flowed like maybe 10, you know, that's
Here's
great.
an example, Kenny. You can find two-bedroom condo in Park City, Utah, not ski in, ski out, like one street away, whatever. You can actually walk to the village and catch the gondola, but it's going to run you about anywhere from $1,050,000 to $1,300,000. Then you can go to Heber City and you can find them for about 900 to $1,000,000, $1,000,001, right? And you're a 5-minute drive to Deer Valley and like 15 minutes to get to Park City. Or you can go into the canyons in the Salt Lake City area in a zone to where STR is permitted and get a 3-bedroom house for like 750,000. But everybody's going to go where the slopes are. Everybody's going to go where everybody else is. So I look at personally, and I've been looking there and I'm like, you know what? Fuck it. I'm looking in this triangle between the canyons and the highway that goes up to Park City in the Salt Lake City area. So I can market to both because you know what there is? It's finding that niche. And nobody that I have seen ever in my community is marketing to powder chasers. And when you can get to 7 resorts in 45 minutes or less, that is more valuable than going up to Park City. They get no snow, but Alta, those of you that are skiers know what I'm talking about, or canyons or, you know, whatever, they get snow, then they can chase. So I think you got to look at market, submarket, then you need to find the hole. And if it's saturated with 15 bedrooms, you said something about this. I don't know if it was on our podcast or where we were looking at those 15 bedrooms in Orlando a year and a half ago, and there was like 4 at the time. And I think it was like the beginning of this year or something. You looked it up, and there was like 44 or 50, or there was 35. I mean, it had grown exponentially. And then the new construction right now is still in that size. So I think you got to do what you and Emil did for me in Banner Elk when I'd never even heard of that market, you know, and you found that gap in the occupancy and the bedroom counts, right? But here's what happens, folks. When you follow the herd, I went into that market and filled the gap. And then what happened? You guys followed right behind me. Now there's probably 30 properties like mine that's there 2.5 years later, right? So that's why you want to find those niche markets. And that's why Kenny gives you an answer of it depends.
Yeah. Cause and frankly, if I just tell you, people just go and do it blindly. So
100%. Good
okay.
stuff. Awesome. Bigger or smaller, it depends. What a way. ... It depends.
It depends. Yeah.
Awesome. We'll see you guys on the next episode. Thanks for joining us. If we've created any value for you, make sure you hit that subscribe button. We'll see you next Thursday, everybody.